Hello everyone, I'm Kunal Sudani from Global Trading Center, and we are here to present the Shinhan Bank India's views as we always come on a weekly basis with respect to the global macro trends, domestic factors, and how it has its own impact on several currency pairs. So first talking about the RBI policy, as expected, it was unchanged. The repo rate was at 6.5%. SDF and MSF ratios were also at the same percentage. The stance also remains the same, so not much change on that perspective. But yes, two things to consider. One is CPI for FY25. Now it's considered to be at 4.5%. That is the projection. And for GDP, again, for FY25, it has been revised from 6.7% to 7.2%, which is a very good jump, in terms of the forecast for the GDP. So these were the positive sides when it comes to the policy. Also talking about what exactly is happening in terms of flows. If we talk about the debt flows, they've been quite tremendously positive because if you see 31,000 crores of inflows till date, starting from Jan 1st till date, has been very good. We have not seen such kind of start when we compare this to the last year. On the contrary, if we talk about the equity flows, they have been negative to the tune of around 23,000 crores. Yes, net still we remain positive because of the debt flows coming into picture. But we see some kind of consolidation in Nifty, currently moving around 20,700 odd mark. So that remains a very crucial support zone, followed by the 20,400, while 20,950 is acting as a resistance immediately. If we talk about what is happening globally, first of all, if we talk about the Fed policy, we had the Fed policy where again it was unchanged, and even if the Fed chair Powell, in his speech he was quite hawkish when it comes to the data points, when it comes to the interest rate trajectory for the future. So in the last to last dot plot, they were clear with three rate cuts, and similarly, I believe this policy also was similar in similar lines of having three rate cuts for the year and not being aggressive at least. Also, after the policy, we had comments by several Fed officials. Almost around four people have already spoken about the policy and the rates and the CPI trajectory from here on. And all the members are of the same opinion of just being a bit cautious. Inflation needs to be under track and not being too aggressive or not being too early to take any kind of decision. So that is why we see 10-year US Treasury yields, bouncing back from almost a low of 3.89% to currently 4.10%. Dollar index have also sharply bounced above 104 levels. But if we talk about support and resistances for yields and the dollar index, for yields 4.25 is acting as an important resistance on the right side, while 3.9 acts as a support, while for dollar index 104.80 is acting as an immediate resistance. While any break below 103.25 gets the dollar index again into consolidation phase. But what's happening equivalently in the China? We also has the data of China today in terms of the CPI number, where it came for the month of January at 0.8%, which was the fastest. I mean, the slowing down of inflation since 2009. Even the PPI numbers was straight, a decline for 16 straight months, you can say, to 2.5%. So, which means deflationary pressure still continues. There is too much of demand slowdown, and thus Chinese yuan is trading around 7.20. For that band, again, we expect 7.12 to act as a support, while 7.25 to act as a resistance for the Chinese yuan. That is a dollar CNH pair. If we talk about dollar rupee and the domestic factors, we have been seeing certain inflows, due to which we have seen dollar rupee even testing levels of 80 to 90 odd levels. For us, what we understand is 80 to 77 acts as an immediate support, while on the right side, 83.15 acts as an immediate resistance. So this around 40-45 paisa band may still continue for some more time. Either side's breakout may define some new range, but for the quarter of March, if we talk about the first quarter, like of Jan to March per se for the year, we think there has to be some kind of appreciation seen with time, and we may eye levels of around 80 to 60 on the lower side, while having a resistance around 83.35 to hold on for some more time. So for exporters, we will still recommend that anything above 83.30, anywhere in between these levels, we should definitely hedge ourselves and not try to eye any kind of uncertain moves which can give you a spike. While for importers, as we have already discussed earlier in our previous episodes, where 83, 20, 25 we can keep as a mental stop, and then at every 30% lower level, like around 80 to 80, 80 to 90, we should hedge some of our imports at least for the near term. So that's all from my side, friends. Thank you so much, and thanks for watching our video, on a frequent basis. Thank you so much. Your feedbacks are really very valuable to us. Thank you.